welcome back to another top-notch video. In this video we're going to be going over a down and dirty version of the TSP and what it is. So the TSP is a 401k plan for folks that are retiring based off of federal service or the military. Why this is important is because this program is pretty much how, without a pension, this is all you have. So it's important that you invest in this whether you're 20 or 40. We're just going to be going over a couple things of what it can do for you. So first of all, a couple reasons I like the TSP is because it's automatic. Some of the TSP is matching funds. If yours matches funds, you should definitely at least be adding 5% because your agency could be adding 5%. You really need to check that out. And the fees are so low. So let's go over some of the funds of what they do and how we can track that. So when I went out and looked at the TSP, there's not a lot of things or resources out there of how to track TSP. So basically what the TSP is it's a number of funds. You have the G fund, the C fund, the F fund, S fund, I fund, and the life cycle funds. Now with each of these, it's important to look at what they mean. So your G fund is very small, consistent growth. From my perspective, it doesn't really beat inflation. I typically only use it in bear markets or to guard capital when the markets are going down. These assets are managed by the Federal Retirement Thrift Savings Board. It basically is U.S. Treasury securities that are guaranteed by the U.S. government. The next fund we're going to look at is the C fund. The C fund basically follows the ETF IVV. So if you want to follow the C fund or see how your funds are doing, you can look at IVV, the ETF, and it will follow pretty much the C fund. The C fund follows the S&P 500, and the earnings consistently primary of dividends and gains or losses in that stock price. These are passively managed funds that remain invested according to the index investment strategy regardless of the stock market movements or general economic conditions. So the next fund we're going to look at is the F fund. Now the F fund follows an ETF AGG. So if you're looking to follow a fund, I would definitely look at AGG to follow the F fund. These are primarily your bonds, okay? It tracks the Bar Sinclair Capital U.S. Aggregated Bond Index, okay? These are mortgage-backed corporate foreign government issued in the U.S. sectors of the U.S. bond market. And the earnings consist primarily of interest income on the securities and gains or losses in the value of securities, all right? Typically, if your C fund is doing well, your bonds are not. They're typically opposite of each other for the most part. The next fund we're going to look at is the S fund. So the S fund really follows the Dow Jones. It can be followed by this ETF here, DWCPF, or another really good one I like to look at, not exactly as accurate as IYY. Okay, so with the S fund, and the earnings are consistent of dividend income or gains or losses of the stock price. It uses index approach to investing. In other words, it is passively managed by managed funds that remain invested according to the investment strategy regardless of the conditions in the bond market or the economy. Alright. The next one I'd like to look at is the I fund. Okay, the I fund is an international fund. Good ETF it follows is EFA. Now, with the I fund, it's a little bit different than the other ones. It replicates the Morgan Stanley Capital International Fund. So basically, this is your international stocks. Okay, it consists of gains and losses of the stock, of the price of the stock, the dividend incomes, and the change in relative value of currencies. Okay, so those are our funds. The only other funds that remain are the life cycle funds. So if you're not into managing your funds at all, a good thing to put your money into would be your life cycle funds. Now, your life cycle funds are a percentage of each of the funds above. The lower the life cycle fund, so a 20-year versus a 30-year life cycle fund, the 20-year is going to be more conservative versus a 30-year. So your 50-year is going to be your most aggressive life cycle fund. Now, if you want nothing to do with the TSP whatsoever, but you want to gain your 5% agency's match, I would suggest putting it in the life cycle fund. Now that we've kind of gone through all of these funds, if you guys have any questions, you can write them in the comments below. We're going to go into managing your funds or resources. Okay, So like I already mentioned, if you don't want to manage your funds whatsoever, but just still want to benefit, because guys, think about it. It's basically free money. All it is money making money passively for you. There should be no reason why you wouldn't want to get involved in TSP if you're in the government or in the military. So like I said, if you don't want to manage it, put it in the life cycle fund. Pick how risky you want to be versus a 20-year life cycle fund or a 50-year life cycle fund, and let it go and don't think about it. If you want to be a little more involved in your TSP, the next thing I would suggest is there is a great phone app that is called TSP Tips. What it does is once a month or twice a month, it'll give you tips on where your fund should be located. Now, this is somebody else doing the research and telling you where you should be putting your funds. So if you don't want to do any research at all and you want to do better than the life cycle funds, I would suggest getting this app for your phone, TSP Funds or TSP Tips. It's in the App Store. Downloading it, and for the first, I think, 6 months it's free, and then after that it costs a small fee. But that's so worth it, guys, if you're making more than that on your funds. So as you can see, you have your funds here, G, F, C, S, and I. Doesn't have the life cycle funds, and every month it tells you a percentage of where your fund should be. So for this month, it has 35% in the C fund, 20% in the F fund, and 45% in the I fund. Okay? Now, if you're not interested, if you're interested even more so of managing your funds, what you can do is you can go look at these ETFs for each of these to see where your funds are moving and try to track them. So the next thing I would look into are certain websites or resources to help you with that. So the resources I'm going to bring up are TSP Talk, okay? I would just save this in your browser and you can look at on a daily basis of where your funds are moving. Okay, so this shows your funds at the top here, what they gained or lost for the day. Okay, and basically it just gives some good reading on each of these funds. One thing I like to look at is the premium returns for this year. So as you can see, each one of these funds and what they've gained for each year, or for this year pretty much. As you can see, the G fund, like I said, it's only for really saving capital. It hasn't gained even a percentage, whereas something like the C fund or the S&P 500 has gained 7%. And if you look at something like the I fund, it's gained 10%. And if you look at, now if you were using your phone app for these, as you can see, shrink this down, as you can see, the C fund, if you would have had your money since the beginning of the year, now this changes regardless, but at least it's someone else doing the research for you. Obviously, they have the C funds allocated the percent that's getting 7% of your money back, or the I fund, which is getting 45%, of your funds are getting 10% of your funds. I mean, it's really simple, guys. So moving on from that, if we scroll down to the bottom here, you can see that it can have pretty much the price percentage change, like I said earlier, and then you have these charts down here, which they replicate what I said earlier of each one of these funds and their ETF. So you have a chart with their ETF on top, okay? So that will show you basically where your funds are going and how to monitor them a little bit better. Now, if you want to move even more in depth, what you could do is you could find a website like Finvez, okay, which has a lot of the market movement for the Dow, NASDAQ, and the S&P 500. And you can really see how in depth and detail you can get. So let's type in IVV, which is the S&P 500. If we look back on our chart, C fund, okay. So the S&P 500 or the C fund, IVV, and let's see what's happening with that. So IVV, as you can see, this chart here shows a very good example of your IVV and where it's gone since, like, let's say the election. And what it does for you guys is it puts in these trend lines so that you can see exactly when the charts are bouncing up and down and gives you a good idea. So this is a good example. So our C fund just basically broke this top, okay, here, and it looks like it has a continue going upwards, or we'll see, but that just gives you a good idea. That's just one fund, and so it gives you a good perspective of where your fund should be instead of just sitting in the G fund or somewhere where it can't be making money. It could could be making a lot of extra money. So these are just all indicators and basically predicts probability, guys. That's pretty much what it does. And then the last thing I want to pull up is, if you want to go the most in-depth detail, you can pull up a portfolio in like free stock charts. You can put in certain indicators and then follow your charts from there. So to give you an idea, and not to go too in depth, this is the IVV or the C fund and where it's going on a weekly basis. Basically, when the blue line crosses the red line, it's going down, and when the blue line crosses the red line again, it tends to go up. And so these are the indicators I decided to use for following to watch IVV or the C fund. So there you have it, guys. TSP is the funds and how to monitor them from the least, just being not proactive at all or being extremely proactive. I'll go backwards of how to look at some of these. So the most in-depth, it would be putting your symbols up here, as in the C fund, and your different funds here. As you can see, I have them labeled right here. A little less aggressive, but still using the ETFs for your funds, would be something like FinViz. Even less so would be going to TSP Talk just to look at your funds on a weekly basis or monthly basis. If you don't want to know the ETFs and just go just to the funds themselves, but still are interested in doing a little bit of management, such as just knowing the funds, you can check out this app, which is TSP Tips, and wherever they put their allocation for the week or month, you can put your allocation, and they typically do pretty well, guys. I was researching it out, and honestly, they do a pretty good job. They do beat, if you were just to stick it all in the G fund or a single fund, it does a decent job of making. If you don't want to manage anything at all, you can just stick it in the life cycle funds. So there you have it, guys. This has been another top-notch video. Hope you guys appreciated it. If you have any questions, go ahead and just write them in the comments below, and we'll see you guys next time.